me check. I'm checking it. Yes. Perfect. Yes, we are live.
We are live.
We are on the air. So Gerod, welcome. I mean, you were talking about the situation, about the lockdown in Chicago, and also please.
Yeah, I think you know, like a lot of the country here in the U.S., we're kind of in the middle of it. It happened. It snuck up on us. It was this, they call it a gray elephant, not a not a black swan, a gray elephant that it's there. You see it coming, but then it gets to you. It gets to you, and it's really big. And that's what happened to us. I think government here seems to be doing all the right things to keep people isolated, and the data says that things are getting better. But we have to stay safe and make keep making the right decisions, I think.
Just a second. We have a couple of minutes. I think some of our audience will come online for the live stream. Before we ask you tough questions, so should you tell about yourself? Why did you become an investor? Or, I mean, this is an interesting area to work.
Yeah, I started my career as an engineer, and so I was always worked with technology. It was inevitable that I would work with technology because as a little kid I was programming and I worked with things. But my career path initially followed me to the corporate world. Worked for some large corporations. Like the last one was Cisco Systems. So I started as a sales engineer, and then I got into business development, and then I did more strategy work. And so almost 20 years later, I found myself that I wanted to do something different from the corporate world, work more with entrepreneurs, and initially thought, hey, maybe I can be an entrepreneur myself, and started working on my own startup. And then around the same time, I had been talking to a graduate school colleague of mine that I've known for 15 years, Serhat Chichikoglu, that I was working with him to help some of the entrepreneurs that were coming in. And he called me one day and said, hey, I need some help in operations, and I need a COO to kind of grow the business. And it was a good fit. It was exciting. I got to work with a lot of international entrepreneurs, a lot of people with great ideas that could use my help and all of the expertise I developed along the way on strategy and sales and those kinds of things. So 4 years later, here I am, and doing investments with international startups.
I mean, follow-up question: what is Foundry? I mean, Sente Foundry or Sente Link does. I mean, what's your target core business?
So we're a bit unique because we're not really a VC fund. We're not an accelerator. If you look at our logo online, it's like a triangle, and we're really the link is an important thing, that we are a link between international startups and international corporations, especially corporations that are family-owned conglomerates, and international investors, family offices, and angel investment. And we accomplish that link through the specific programs that we run. So we connect the startups to the corporations on their innovation priorities, so they learn from each other and they can do projects together, and connect that to the early stage capital that the startups need to grow. These are generally pre-seed startups, so having some capital, but also having their first B2B customer is really important for them, and that's we've designed our programs to do that.
And you have lots of batches, or do you work with the or universities? What kind of organizations do you help in this perspective?
Mainly, these days it's a combination of Well, let me start with the program domains that we work in. So first is what we call human essentials, and the perspective there is how do the problems that humanity will face with urbanization, more and more people moving into the cities, and the challenges it creates for how we eat, how we move, the access to clean water. Some of these things we can solve with technology kinds of things. So human essentials is one of those. So you're sharing our investment portfolio, some examples we have in there in things that we're doing in the food tech area. Our next program with Yıldız Holding, a Turkish-owned conglomerate, but has operations all over the world, is around very much around healthy snacks and food and ingredients, so that the consumers are changing, thinking more about what they put in their bodies and the ingredients that go in them. So we're scouting for startups with them that have innovations across the ingredients, the new healthy snack products, as well as the manufacturing, R&D tech, and the packaging tech for those products. That's human essentials is one. Another is about mobility. So we've done 3 programs in mobility. The first 3 were around movement of people, and now we're moving a little bit more towards movement of things. So logistics tech and V2X, which is vehicle to infrastructure, vehicle to vehicle communications. We think that's a big area that we can go after. Third area is around industrial, connected industry. So industrial IoT, big data and AI in industry, such as manufacturing, energy. We did a program with EnergySoft, for example, in data and AI. And then finally, what we call urban tech, and working with municipalities on smart city and other kind of challenges that the cities face. So those are the main areas that we work in. So we do our cohort-based programs specifically in those areas, and work with the corporations, and in a lot of cases municipalities or universities, to curate the startups, coach them, and evaluate them for investment.
And could you please share some success stories from your previous course? What are the stages of the startups right now, and how they are growing?
Yeah, I hesitate to pick any specific favorite, because I don't want to leave anyone out. But we do invest generally at pre-seed, and then are along the way to participate in future rounds with them. So we generally, so we've had, I think 90% of our portfolio is still in operation. So that's a good general success story. We have 22 investments. We're closing on 3 more with Yıldız Holding across 16 countries. What else can I share? I guess the total valuation of the startups that our graduates are up to 180 million, and they've raised $32 million in total venture funding.
What is your general ticket size? Usually,
yeah. So usually our ticket size is between 50 to 75K. That's US dollars. That's at selection of first phase of our program, but that is usually also tied to a customer project with a corporate partner. So as a pre-seed startup, the 50K is good. It can be good runway, especially in certain regions like Turkey and the Middle East. But that first customer is also extremely important. So we think that both of those are equally important. We also, built into our programs, have the option to invest in a future round, and that's typically 250 to 300K. I think our largest investment has been 1.5 million, but usually our ticket size is that first investment of 50K and then follow on of 250 to 300.
Munir has a question. I mean, directly, what metrics are you tracking and considering an investment or the selection?
So we have we build our funnel in multiple phases. So first, there needs to be a strategic alignment to our partners' investment priorities. So if there isn't a possibility to do a project, and these are B2B startups mainly, if there isn't a possibility to do a project, then it's no, they probably won't be considered. And then in the first phase to be selected for that first 50 or 75K, they're pre-seed startups. So we're looking at a combination of, is the market interesting? So we do a lot of analytics. We have a great analyst team in Istanbul and someone in London that helps us do deep analysis on the market, the competitors. We look at the team and the qualifications of the team, also the character of the team. So we do a lot of interaction with them, more now on things like Zoom and video than we did face-to-face, but we get a good understanding to, can we trust these people? And then we look at the cash flow is very important to us and things like working capital at early stage. So we do a detailed cash flow analysis with them to understand what kind of runway they have. And then we package that together and submit that to the investment committee. So pre-seed, we're usually not looking at revenue so much as potential. So can this grow? And what are the resources they need to grow and to make it to the next round and the round after that? Because exit is a little too far away for us at the stages we invest.
Any deal in Africa?
We do have one deal in Africa we're very excited about. It's called Mojo Ride, and this is a shared transportation system in Africa where people are moving off of cash and towards cashless transport. And so if you think of the shared minibuses and shared taxis, the minibuses are like the dolmuşes in Istanbul, but this is in Ivory Coast. But it has potential, and they're building partnerships in places like Nigeria and Ghana. We see a lot of potential, and that one is actually grown. We participated in a follow-on seed investment last year that Serhat and I actually invested personally in. So that one's really excited. That's our first investment in Africa.
And you have seen many startups. What are the common problems, especially in these early pre-seed stages of their life cycle?
Yeah. So one is they're mostly B2B, so they underestimate the sales cycle of selling to companies, especially large companies. And so that really impacts them. If they don't have a strong funnel, and they're betting on some opportunity to close in the next 90 days and it doesn't, they can run out of runway. So they really need to think strategically about building their funnel. And at early stage, it's hard for them to think strategically because they have so much to do. Another thing that I think is a common problem that startups have is the lack of focus. So if a startup comes from, say, they were developing software and they come up with an idea for a product, they sell this to one company, and these are B2B startups, and then the next company says, I want this other feature, and then they develop something for that feature, and then another customer asks for a different feature. And this is most common in smaller B2B markets. In the US, people, the opportunity is big enough so you can build a product that can scale to thousands of customers. But in small countries, your universe of potential customers may be small, so you think, I need to build something different for each customer. And that's kind of a red flag for us, because we look for companies startups that can scale beyond their own country.
And I mean, you have also seen lots of startups while you invite them to a meeting. What are your red flags in the meeting? What happens? I mean, if you interview a startup?
Yeah, I think that's one of the things we test is focus. So if we see that they're like kind of not really focused, if they're all over the board and talking about all these features and use cases, it gives us a bit of a red flag at early stage. I think another thing is if they're too focused on product and the technology, and they don't seem to understand the business, their customers. If we see a founder that has no real experience or exposure to their customer market, if they came up with an idea for retail and they don't know anything about how retailers work, that's a red flag for us, and we can catch that pretty quickly through some questions.
I have another question, if you don't mind, Brock. You work also closely with very big corporations along with startups. So how do you see the relation between startups and big corporation? How it is evolving, and also what are the main problems over there?
Well, I got to be careful, right? Because we have our customers, so I don't want to say bad things about them. So there's one of the challenges in corporations working with startups. First, they need some innovation strategy, right? If they don't have an innovation strategy, they don't know where to put a startup, because they may have internal teams that could be saying, I could do that, I can do that, I can do that. So they need to know what they're good at, what's core to their what they do, and then what is an opportunity for outside innovation and working with startups. So that's what, having a strategy. I think it's also important to have some central coordination, so that you have a champion within the corporation to bring it to the business. But it can't stop at that person. Sometimes you see corporations that have an innovation team that have no influence on the business. So it's important that the innovation team has some influence in the business and support of the executive team. I think those are the two most important things. If those things happen, then I think we can be much more successful with the startups. And if the corporation doesn't work with the startups, if it stops after like the end of our first phase, and it doesn't look good on us. So it's a very important part of our brand that the startups are happy with their interaction with the corporations.
Gerod, a following up question.
Yeah.
Follow-up question, Elif. Just a second. What do you think about this year? The companies, are they going to be interested in investing startups, or are they going to be also selecting startups?
Yeah, I was about to ask the same thing in this outbreak circumstances. Yeah.
Well, I have, I guess, a similar answer for like just generally how do we think about this outbreak, right? So if you're extremely pressured for in the short term, and so for example, travel companies right now are really under a lot of stress because they have very little business. So I would not expect them to be working much with startups to any like investing or putting any real money. They're able to make connections and provide support, but they don't have the budget to do it. But I think there's a lot of companies that understand that the world is changing, and this is one of many things that force change in the world, and it's going to create new ecosystems in the future. I think we're going to see technology companies that will play a bigger role, for example, in healthcare and in transportation than they did in the past. So any corporation needs to see where, I come from Canada, so we talk about where the puck is going. You need to skate to where the puck is going. And so anyone that is strategic in that way, I think that helps when you have, say, family-owned or private-owned companies that don't have to answer to shareholders every quarter, gives them a little more long-term view. So I think we'll see a mix, and we haven't seen any corporations saying, we're going to stop working with you because of this. I think it's just causing them to just think more strategically about their investments, and not just as a marketing exercise, but as a way to prepare for kind of what the future will be.
Zaid asked a question. If you believe that startup has a potential, but they are not ready yet, would you guide them or tell them the points that to come back when they are ready?
Yeah, absolutely. And we are a very data-driven company for what we do. So we do a lot of, we keep a very good database on the startups that are out there. So chances are we will actually reach out to them when we think they're ready, but absolutely. So we tend to bring startups in when they're, what we say, MVP stage, when they have a product that maybe not quite ready for commercialization, but just about ready for commercialization. So if they just have a PowerPoint deck, they're too early. But in a lot of cases that precede, they may be missing things, and in our programs we will help them with those things, or help them find connections to help them with those things. But yeah, I think if you're any investor in like any stage, you need to be prepared to tell them what they're missing and be honest about it, and that we'd be open to to having them at the next stage. I have an example in our mobility programs. We've had one startup that participated twice because they weren't really ready the first time.
And how much percent do you invest, or what do you get from the startups, and how do you interact with the founders after investing?
So the percentage really varies from program to program, and we've adapted to changing market conditions. So these days, the cash investment is on a safe note, so that creates, that's really based on the what that safe note converts to. So it converts to equity at the next round. But generally, the total investment is between 2.5 to like 8 or 9%, but it really depends on the program and the startup. The second part of that question, the programs themselves last for a year if they're selected to the second phase of our program. So we're with them throughout that year. And we have startups that we actually just had a virtual happy hour about a week and a half ago that we're still working with, that they were on our virtual happy hour and they were in programs about 2.5 years ago. We're still working with startups and helping them from the work we did even 4 years ago. So we're in it for the long haul, partly as because we're investors. In some cases we're board members, but we know that you got to maintain an ecosystem and keep stay in touch.
And do you really relocate these startups, I mean, to US or other markets, or do you invest, for example, the African startup in their local environment?
We'd like to invest in a business entity where we understand the legal and tax implications first. So of course, in the US, Delaware is the natural choice. But we have also invested in UK entities, Israeli, Turkish, and there's a Luxembourg one that's coming up. So we can be somewhat flexible, but we need to really understand what the implications are, because every tax and legal, like how corporations are formed and what investment rights you can get are different. So in the African startup, the investment is actually in the US entity that has a subsidiary in Africa. And I think it's not just us; it's the investors that come after us that have that same perspective. So we can get that done early, and then that minimizes the tax and legal implications versus doing it later.
And once, as the outbreak is completed, what will be the main perspective and main important point for the investors to analyze a startup? Is it profitability or revenue or users, client? What happens?
I think in the short and medium term, I think there will be more importance on revenue and cash flow than there was in the past. User acquisition just for the sake of acquisition without thinking about the importance of the customer lifetime value and the customer acquisition cost, even for B2B customers. I think that will be more important for the next couple of years. I don't know if we'll return to the old normal where valuations were high and you bet just on top line. That hasn't, for us, we put a lot of importance on capital efficiency, and that's part of the reason a lot of our investments are in emerging ecosystems, because we know that engineers are very qualified and good, but they can do things with a lot less fundraising than in Silicon Valley. So that's always been important to us, and I think now Silicon Valley investors are paying more attention to that than they were before.
So we have many questions, by the way. Serhat is also on the chat box. He's also answering them just right, the YouTube channel. And what are the you have lots of experience with many different countries and startups. So what is the main factors that that triggers the startups to fail?
In B2B, I think I mean, running out of cash is obviously a challenge at early stage, so that's important. But there's factors that go into that. So running out of cash obviously help. I mean, because you don't have enough runway or investors to fall back to. But one of the things that we see is they get kind of caught in a product trap, and what I mean with that is they don't understand the link between marketing and product. And when we see a good B2B product, it's a little like a B2C product where if you're a potential buyer of that product, you go to the website or you see something on social media and you download or you start interacting with the product and you already understand it, you understand its value. And by the time it's time to talk to a salesperson, you're already a qualified lead, and they don't have to waste time with you doing a demo. So there's not enough startups that build their product in that way, that where product and marketing are all tied together. They think that all I need to do is build a product and then call people and say, do you want to do a demo? Do you want to do a demo? And that's very expensive, and that's talking to a lot of opportunities that are not qualified. So I don't think there's enough, especially outside Silicon Valley, that think with that mentality, and I think that puts them into a trap because they end up spending so much on marketing and not enough, or spending so much on product and not thinking about the link between marketing and product.
And do you see the same approach in startups in US and different countries, or is it a common issue?
I think that's part of the mentality in Silicon Valley. The problem in Silicon Valley, of course, is valuations are very high, and it's a shark tank for startups there. But outside Silicon Valley, I would even say it's somewhat true here in Chicago, that that kind of understanding is missing. And then in emerging ecosystems, I think it's just people are used to the old school way of selling products, and like that the product and marketing are two different things. But yeah, it's somewhat common across other regions other than Silicon Valley.
There are lots of startups to go globalize. I mean, to go to be global startups. So what should you recommend? Also, the question is, what exactly needs to be ready for the pre-seed or seed or post-seed startups to globalize? How can the best manage the solutions in different regions?
Well, I guess number one is apply to our programs, and we can help. But I think first, I think startups need to think global very quickly in their journey, and very often they think too locally. And usually in the B2B world, local is not big enough to really be a scale up. So they need to think globally early. That means thinking about competition globally, and because we're measuring them on global competition, not local competition, and looking at the market and the value proposition in a global way. And we've seen some of the data that startups that start in Europe, if they don't have their first customer, for example, in the US by Series A, then they get stuck in Europe, and they never really scale up beyond Europe. So it's important to get that foothold somewhat early, at least getting the conversation, understanding your market outside of your home region as early as possible. Spending the money and putting salespeople or moving founders is expensive early, but having a mentality and understanding who your competitors are very early is really important.
Okay. Yeah, go ahead, Elif.
I think we have been live for more than half an hour. So would you say to startups as a last point, Gerod, about your next program, or before we close up this session?
Yeah, so let me put a plug for two programs, and I mentioned the one with Yildiz Holding, or specifically the Plattis business unit under Yildiz Holding, which includes like the Godiva chocolate and the Ülker family of products. Very interested in working with startups that are kind of the next generation of the food industry, healthy, more natural, more sustainable, and that includes ingredients and products and then technologies to help a company build new products, so R&D tech and AI. So that's one. And then later in the year, we're going to have our next mobility program, which is a lot about logistics this time, movement of goods. And logistics, I think we've exposed some of the deficiencies in our global logistics systems recently with coronavirus. So, for example, the oil prices in Canada reached negative values yesterday. That was not a supply and demand problem. That was a logistics problem. They were not able to store enough oil for people taking delivery of their May futures contracts. So you see where these logistics thing is happening in healthcare and food. So we think there's lots of potential for disruption and unicorns in the next generation of the food industry and logistics industry. So that's why that's our focus this year, and would love to see more international startups to apply for our programs and work with us.
So Gerald, thank you very much. I mean, for this interview and your valuable time. And I think we can share the links of your site to apply. And Serhat also shared many things on the chat. And have, I hope, a great new program with the new food tech and also agriculture and also the sectors that you mentioned. And we will be very happy to support you and your startups in next phases. Thank you,
Burak and Elif. I love what Startup Istanbul is doing, and thank you for all the support that you're providing for startups all over the world. So
you are welcome.
And thank you.
Stay safe and healthy.
You too.
Yeah.
Bye-bye.
Have a nice day.
Bye-bye. Bye-bye.